Well, that's a day so far, and it is a bit disappointing if you're a bull because the market was looking 200 plus points in the aftermath, of course, of what the RBI did in terms of changing of stance. And as we begin, the market actually slipping a little more sharply now. We're just about 25 points in the green on the day. And from about 205, 206 in the afternoon, Nifty's given up 100 points. We were at 25,140, we're at 25,040. So clean 100 points gone in the last 20 odd minutes of trade. This is Closing Bell. We're coming to you from the CNBC-TV18 Motilal studios. I'm Prashant. With me, my colleagues Surabhi and Rima here. Nigel, of course, is joining us from the newsroom floor. Guys, good afternoon.
Hi, good afternoon, folks. By the way, did anyone see the China market today?
I was just going to say, like, if Indian shareholders are disappointed, the Chinese shareholders, look at them, 6.5% lower by the close of trade. So, yeah, not that you should be happy when someone else is sad, but just saying that
in case of India, China, it's actually ended up being quite the opposite, right? Inverse correlation between these two markets. But even though China's fallen today, not like we've had a roaring rally.
I love it. Rima is apologetic. I should be. But anyway,
we're well-mannered investors.
Well-mannered, that's the right word. Sorry. But, you got, what, 40 points, right? So 25,055 on the index. And, yeah, as I said, about 100 gone in the last 25 odd minutes or so. So just a couple of points on the board before we move any further. So off the highs by quite a bit. But, by the way, the Nifty has exactly respected the resistance for once. We put out in the morning 40 hourly exponential. That's changed, by the way, a little bit. But, that number was 25,239. Guess what the high is? It's in the 25... I think the high is about 25,230 something. So you almost basically got there almost exactly. And then there was that sell-off which has ensued. Bank Nifty, I think the last I checked, was off even more from the highs. It was more pronounced. And there the resistance was 51,800 that we put out. The high, we didn't get to it. Fell short by 100 points, less than 100 points. 51,707 was the high. And of course, since then, we've seen a fair bit of selling. I mean, as long as the market breadth, overall broader markets remain healthy, it was almost 3:1 about 15 minutes back, but that has also come off quite a bit. 1,900 stocks are higher and about 750 stocks are lower. So it's, gaps closed a little bit, but not by much. Sectorally, what's doing well? Real estate, pharma and healthcare. I counted 3 indices with gains in excess of 2%. And those are all on your screen. Rima.
Well, there's one index with a loss of more than 1%, and that's FMCG. In fact, that's the biggest casualty today with names like Nestle. So Nestle is the top loser. That's down more than 2%. But even ITC now is down close to about 2%. HUL, Britannia under pressure. And heavyweights like Reliance Industries and HDFC Bank too have cracked. Well, the Nifty Bank is down. It's actually on the flattish side. HDFC Bank is down nearly 1%, and Reliance Industries too continues to see selling pressure in the last 2 hours. So when these heavyweights crack, you've seen that market give up all its gains.
No, absolutely. Having said that, for all the flattish trends that we're getting on the Nifty, in the mid-cap universe, there's a fair amount of bounce. And I'll just name 1 or 2 stocks to give you an example. Divi is reacting really well to some brokerage commentary that came in today. Look at the stock flying away, 8% up on Divi's now. We'll talk more about it. Torrent Power, because they're doing some more work with the Maharashtra distribution company. This is on the pumped storage hydro side, if I remember correctly. So that's one stock in focus, 6% correct, on the upside. And look at Akzo Nobel. You remember the conversation that Mangalam had with Amit Singhal of Asian Paints, and Mangalam had categorically asked him whether Asian Paints would be interested in any parts of Akzo's business. And he said that we would be looking at it, and maybe that's the excitement around the stock. It's really a high flyer there. So even though the overall headline index is quiet, you have a fair amount of sparks flying in the mid-cap universe. Nigel, how are you reading things?
Well, and Rima spoke about India as well as China, right? It seems that at once that stimulus talk started, maybe investors decided a bit of a fling with China is good. But it appears that they could be returning back to the long structural story that's India, or so to call it, the love forever India. So, and as you'll be doing that market check, you'll be talking about the markets being up 20-25 points odd. In the last few minutes, in fact, the market has spiked up a quick 40 points, all of that in a matter of around 5 minutes. And the Nifty Bank that was down in the red, actually, that's pulled up close to around 100 points. The reason for that is ICICI Bank. That moved into the red, that picked up yet again. And you have SBI as well, that's been holding steady with a gain of close to around 2% or thereabouts. On the flip side, though, Bajaj Auto in the last few minutes has seen a sharp downtick. It was trading in the green, but suddenly Bajaj Auto has lost its way. Bit of a downtick on that one. Mitesh Thakkar is back with us. Mitesh, earlier today you were not sounding very convinced with regard to the bounce that we saw yesterday. What is your current view, and at what point of time will you start getting bullish? Beyond what level on the upside?
So, good afternoon, Ajit. The initial view is that this bounce back will find it very difficult to get past 25, 350, 400 zones, and we didn't even attempt that. We just went to 25, 235 and came back. One, this market texture in the short term remains sell on rallies. I still believe that the upside reversal point is about 25, 400, so we need to cross that to turn positive. But the odds, I would say, are on the lower side. And two, I think the recent low of 24, 800, 750, if that gets taken up, then we are looking for a deeper correction. So for the timing, we'll try and sell closer to 25, 350, 400 zone, and trade with more stock specific bias. That's the way we are approaching.
Okay, Mitesh, what about stocks? What are you recommending?
So I have ITC as a sell disclaimer. I have some put options positions over here. I think that's giving some kind of a breakdown. So keep a stop at 503. Look for a target of 482, 481 on the downside. In fact, I think I believe that you were pointing out during the chat about weakness in the FMCG names, and I think that remains the case. That apart, so ITC is on the short side, and I have Glenmark, which is making a fresh swing high on the buy side. Keep a stop at 1760. Look for targets of 1850.
Okay, thank you very much for that. Talking about pharma, Divi's laboratory is surging in trade. There is a bullish note coming in from Citi. Ekta joins in with the details. Ekta.
Well, yes, Divi's Labs is in focus because Citi has initiated with a buy and a target price of 6,400 rupees on the stock. Divi's, according to them, has secured its place in the GLP-1 APIs. This is as innovators look to de-risk their supply chains within that space. It can be an $800 million plus revenue potential for the company by CY30, according to the brokerage. Now, Divi's is likely to also be a key beneficiary of the supply chain diversification trend. This is as innovators are placing more confidence in the company, and this is reflected in new names that they've added in their custom synthesis business. For FY26 and 27, the EBITDA estimate is 3% and 12% ahead of consensus for Citi. This is driven by GLP-1 and new products in their custom synthesis business. The failure to scale it up is a key risk to the thesis that captures a bear case target price of 5,100 odd rupees.
Okay, got it. Thanks for explaining that to us. That really puts in context the market's excitement, Ekta, around Divi's, because it's not just any other brokerage note. The opportunity in question is this whole GLP-1 opportunity, which by some estimates is a $100 billion opportunity anyway, globally speaking. We've got Prakash Diwan joining in. Prakash, thanks for joining us. I don't know, if you've managed to catch up with all the huge hype and buzz around GLP-1, right? Apparently breakthrough drugs for diabetes and weight loss. And it seems now Divi's could be a key API supplier as well. Your thoughts?
Good afternoon, Subhi. So, this is going to be a mega segment of sorts. It's, of course, blockbuster given the, universally, hungry market that's waiting for it. But, it's very simple. This is not going to be one-off in that sense. It's not just going to be a Novartis which is going to benefit. It's not going to be just a few players. It's going to be the whole ecosystem that will evolve around it. For example, a couple of days back, I remember Mylan had a arrangement that they announced, and Natco Pharma, which also has an arrangement with Mylan in supplying elements of this drug, also benefited. So you will have to look at the entire ecosystem. It's going to change things dramatically. It will take some time. I do agree there's a lot of excitement around it, but 2030 is still far away. So these announcements are very interesting to start watching and tracking. But whether you buy it on the back of this announcement, maybe not necessarily immediately. So wait and watch. But it does segregate a lot of the larger pharma names from a promise perspective, from a earnings visibility perspective, the kind of TAM that they would start addressing. So that will tilt the scales at some point. But as I said, it will take a while.
Okay, hi Prakash, good afternoon and good to see you. Well, we're on the verge of rate cuts here in India as well. The globe has already moved ahead, and maybe in the next couple of meetings, we should get rate cuts. That normally helps real estate, which is already in a good space as of now. As we speak, a couple of stocks. You have Arvind Smart Spaces, that's moved up. I believe that they have launched a new project in Bengaluru, and they're talking about a revenue potential of close to around 600 crores. Oberoi Realty as well has taken off. The stock has moved up very, very sharply. What's your view on these names and anything you like from the space?
Good afternoon, Nigel. So, there was a time when Arvind Smart Spaces was worth looking at. You had to be smart enough to buy it at those levels where it was actually available at levels lower than what the promoters had bought warrants at. So, but then that's been quite some years away. Years back. But what I can tell you from the real estate space is that what Gurgaon did to real estate players in the north, the same thing Bangalore is likely to repeat now. There is a very clear premiumization trend that's evident there. There's absolutely nothing which is in that close to that affordable segment that's coming through. And if you look at what Century Textiles has done in terms of the kind of parcels that they've acquired and the focus that they've got, I think it's a story that's underrated. So if you really ask me, because they have too many things on the platter, you can't really make out whether at $2,700 Century Textile is the next multi-bagger on the real estate side. But my sense is if you have the patience, it's come into traction. A lot of their projects have started getting into that monetization phase. In another couple of years, and you'll probably see the balance sheet support growth, which is almost 2.5, 3x of where they are today. So I'm quite positive on this name. But as I said, this is not something which is going to be very soon, very quick or rapid. Given the flavor of the market, people want instant, responses. That might not happen. But you should look at this from a very balanced real estate portfolio and great balance sheet.
Okay, all right, got that. Let's move on to the other key stock of the afternoon, and that continues to be Torrent Power. I think we'll have Vivek joining in the next couple of minutes. Now, the news with Torrent Power is that it has secured a 2,000 megawatt energy storage contract from the Maharashtra Distribution Company. And this is pumped storage in terms of hydropower that we are talking about. Vivek is joining in because the market definitely seems to be a little excited about the opportunity. Vivek, how big is it?
Well, quite important, quite big, and that's why, Torrent Power is doing quite well. Just to reiterate, the news flow. First thing, like you mentioned, it has received the LOA, the letter of award from the Maharashtra State Discom. Now, this is for a total of 2 gigawatt of pumped hydro storage power, pumped storage capacity, as well as supply. Now, remember earlier, the company already had gone ahead and committed close to 1.5 gigawatt to the Maharashtra Discom. So now it's received an LOA for an additional or an incremental 500 megawatt of power supply as far as pumped storage is concerned. Now, remember, this particular project is for a tenure of close to 40 years, scheduled discharge of 8 hours with maximum 5 hours of continuous discharge per day. Morgan Stanley has written a note on this particular development. Morgan Stanley says that the company can now expect annual revenues of close to 1,680 crore from this particular project. So it's a significant development as far as Torrent Power is concerned. The project, according to Morgan Stanley, could generate equity, IRR, an internal rate of return of close to 15%, assuming a capex of close to 5 crore per megawatt and an 80 to 20 debt equity ratio deployment. So positive development for Torrent Power. It's a large commitment from the Maharashtra Discom. No wonder the stock is doing well in the session today.
Okay, all right, got it, Vivek. Thank you very much for the highlights. Torrent up 5% today. Let's put up a longer chart. Torrent has actually done fairly well over this year as well. The gain is almost 160, 170% if you put the last 12 months in perspective. There you go. About 1910 on the stock now. Prakash, comment on this. This whole concept of pumped hydro storage, this is obviously becoming more and more popular, and now large contracts are being awarded as well. What's your take on Torrent Power?
So, Subhi, I think pumped storage is, as you rightly said, it's kind of catching fancy because it's viable. And we need this because hydropower is something which we've never seen it evolve beyond, the basic facility. And, interestingly, what's happening is a lot of the hydropower was focused onto the mountainous states of the northeast and of the north. And given the environmental shift out there and the kind of slew of disasters that we've seen, I think the focus is now shifting to the states like Maharashtra, Karnataka, where hydropower is not from an altitude perspective, but it's more from a natural reservoir perspective. So that shift is actually making more sense for all these proof of concepts to get more established and reach commercial scale. I'm quite positive on it, but it's still too early for the cycle, for the ROE cycle to kind of get established. So Jindal Energy has been, for example, JSW Energy has been into it for quite some time, but we've not seen the entire completion of money coming back and the return ratios falling in place and stabilizing. So I would believe it's promising. But given it, specifically on Torrent Power, I don't know if you recall, there were a few years where this was the only company that was into distribution in very, very promising pockets and generation as well. So what's worked for them is that they've not been very volatile in terms of their growth trajectory, but they've clocked some very impressive numbers. I think they'll still go ahead and do that. It's a very mature business. Don't expect fireworks, but if you really want to allocate some money beyond, let's say, Tata Power in this space, I think this stands out as very well valued, very reasonably valued from that perspective, given the kind of prospect it has. So we've recommended this in the past to our clients, and they continue to hold.
Okay, all right. That's a take on Tata Power. With that, I think we'll have to get into a quick break. Just check on the market. By the way, the sensex has dipped into a negative 22 points lower. So the disappointment on the large cap screen, there's sort of no taking away from that. Let's look at the Nifty and see some of the stocks coming under pressure. There's Bajaj Auto, there is ITC, there's Coal India. These are some of the names that are seeing renewed pressure. Actually, all of FMCG, like Rima was also pointing out earlier, plenty of those stocks under pressure. There's HUL. There's, of course, Reliance itself, which is down about 1.5% at this point in time. Prakash, just your sense on FMCG, and it's really flip-flop, neither here nor there. Any clear takeaways? Yesterday, Trent was a mover on news, but would you recommend anything, any action, either a buy or sell? I'm talking about large cap consumer.
Absolutely, Sumi. That's the space you need to look at. You'll keep on getting these reports or views and opinions about certain pockets of a Dabur not having enough juice, or Nestle struggling to kind of increase its pricing somewhere. But, the underlying thesis is very simple. If there is demand revival and the monsoon has been timely, good, well spread, and there is going to be absolute decent improvement in margins for quite a few of these companies, because the raw material for the last 12 months has been fairly benign. I think the FMCG names will actually outshine. The only thing is that it's a matter of when the market starts taking cognizance of that. But the moment it does that, you'll probably see a expansion in EPS and a very rapid expansion in the PE multiples, which are already stretched most of the times. But you also have that being in a band for some time, which means that the PEG is actually looking quite okay for quite a few companies. I would still go with the Dabur. I would still go with the Nestle. They seem expensive all the time, but this is where you need to kind of be more invested in a resilient, this thing where liquidity is good enough. And in any case, FI money hasn't been chasing these sectors yet. So, whenever there is some sort of a pickup in investments across the board, that's when they will start doing well. But good levels to look at some of these large names, as I said.
All right, Prakash, we'll leave it there. Thank you very much for joining us and running us through your thoughts and perspective on a variety of stocks and sectors. We'll take a quick break here. Alok Agarwal will be with us on the other side. We continue this market conversation. Welcome back. The market is, I have to say, struggling a bit, at least as far as the indices are concerned. You've got just about 25 points left on it. And we're at 25,040. So steep climb down, 200-point climb down from the day's high, which was, of course, pre-noon. Alok Agarwal is with us. He's fund manager at Alchemy Capital. Alok, good afternoon. Good to have you here. Prashant this side. And I was looking at your portfolio, Alok. We can talk about the broader market. Maybe just a quick word on some of your top holdings. I think Trent is right up there as one of the top holdings, and must have made you and your investors happy, depending on when you got in. But for those who don't already own it, what's the view from here, Alok? With the disclosure that, of course, it's your top holding, so I think that's a given. New entries into new segments like lab-grown diamonds with this new brand. Just talk to us about what your thoughts are.
Sure, Prashant. I think the way this particular management has executed is really par excellence. And what they did with the turnaround of the West Side and thereafter Zudio, which was a small part of Star Bazaar earlier, and then bouncing back and almost spreading to the whole country like almost wildfire, growing at a super fast pace. And even the profit growth of the company for the last 3 years in the CAGR of close to 50% or so. And with their latest announcement around lab-grown diamonds, and if they can do further things on the Star Bazaar format as well, they have shown their execution. The market likes the execution. The numbers are getting reflected in the financial statements. Nobody can be complaining. Of course, the valuations are on a higher side, and the stock has done well. So to that extent, if there are rewards, if there are visibilities, there is a price to be paid for that as well. So we have been holders for a pretty long time and quite happy investors out there. But at the same time, the company is doing the right thing, generating cash flows out of the existing businesses, growing them, and finding ways and avenues to invest them more profitably as well. That's what calls for a much larger moat, much larger growth juggernaut to continue.
All right. Hi, Alok. Good afternoon and good to see you. What are you making of Nestle? All through the trading session, the stock has been under pressure, and a couple of these FMCG names as well. ITC is down, Nestle is down. Nestle, I guess the street is sniffing weak results. There have been some selling across staples, and I think, the Maggi sales, people are not too optimistic, at least for the past quarter. Some of these are quality franchises, but what would you do? Would you look to buy into some of these FMCG names on a dip? And what's your preference, staples or discretionary?
Nigel, we are more of the growth investors, I would say. And if we look at the FMCG basket as a whole, they are trading at an all-time high valuation of close to 45 times on a one-year forward basis. And the earnings growth are actually struggling to even hit double-digit mark. So, on a very low growth to pay a very high valuation, it's a combination that doesn't work too well. At the same time, we know as per the narratives as well, especially post-COVID in India and in most of the countries abroad, we saw a K-shaped recovery where the top 5-10% of the population was better off, but the broad-based recovery wasn't there in terms of helping the consumers downtrodden as well. So we are seeing lower volume growth, lower earnings growth for a lot of these companies. No doubt they have been quality franchises. But we've got to also realize that over the last 15, 20 years, the cycles shift. What was an investment-led growth in the first decade of the century, in the previous decade, it was largely a consumption-driven growth. But all signs are pointing toward that we are more in a Capex-driven growth kind of a cycle, wherein these companies are trading at higher valuations with low growth, and hence drives our underweight stance on these companies.
Okay. So just sort of looking ahead and the sector rotation that's played out, what is the call on some of the Capex plays, manufacturing, PSUs? Because up until, say, August or so, it was this side of the market that was sort of leading the rally. What is your stance here now?
In the middle of that sector rotation continuing, we have to bear in mind that for a long period of time, from 2007 calendar year end till about, say, 2020 and just after COVID, for a 13-year period, domestic cyclicals put together, their market cap as a cohort had barely risen. at a time when the indices had gone up 3 times, at a time when the nominal GDP had grown close to 3 times, as a cohort, domestic cyclicals did virtually nothing. But that doesn't mean they need to bounce back. The focus was coming back right from the government side. The investment to GDP ratios in India, which were at the highs of around 36% in FY12, we had gone down to a 2-decade low of around 26% or so, 27% in FY20. We are bouncing back now. We are above 30%. And going by the announcements and the resolve of the government and the private capex already showing signs of pickup, we do expect that the capex-driven rally is likely to continue. We do see that there was in the near past, especially post the election and the budget and the near few months, there was an unintended kind of policy tightening. We expect this to pivot back into capex mode. The domestic balance sheets in terms of corporate balance sheets have been pretty strong. If you look at the Nifty 50 or the Nifty 100 kind of ROEs, they are at more than 10-year highs. The government balance sheet is super strong. The balance of payments continue to be strong. The reserves are good. All the makings, the building blocks required for capex to continue are all there. It's a long runway of growth. There will be speed bumps like the ones that we saw in the last 2-3 months to come through. But yes, we are probably in the middle of that longer term capex to play out.
Okay. So Alok, on earnings, I mean, given that that's the next litmus test the market is running into, I think the expectations are running very low from this quarter already. I think the overall sense is that we'll probably see a moderation. But are you expecting this to be a temporary patch, or do you think earnings could become a headwind that the market has not yet factored in?
It's a mix of both, Surbhi. I would say that when we started off the financial year, it looked like that 15% kind of earnings growth for each of these 2 financial years would come through. In the first quarter of this financial year, we saw a low single-digit kind of earning growth. And this quarter also, the expectations are on a lower side. We got to also understand what happened in the last 2 years. In FY23, the revenue growth was good, but due to Russia-Ukraine war, high commodity prices, we had low margins and a low earnings growth. On the back of low earnings growth of FY23, we saw a big margin jump in FY24 and hence a good growth as well. Now FY25 is on the back of a very high growth that we saw in the last year. We do see some moderation to happen, but from FY24 to 26 over a 2-year period, the larger indices are likely to post the consensus estimates are also pointing towards 12-13% kind of annualized growth, which is not bad at all. But also we want to bear in mind that a lot of these larger indices are hogged by those sectors that had done well in the previous cycle, which were more on consumption-driven sides. A lot of the capex-driven side, the manufacturing-driven side, are not really fully present in the main indices, the likes of premium real estate, the likes of defense, the likes of power, the likes of railways, the likes of EMS. These sectors are the ones that are seeing larger growth, but they are kind of underrepresented in the main indices.
Okay, no, absolutely, and it's point taken. By the way, Alok, any sort of view near medium term on markets themselves? Any strong views on where we are headed? Because we're down. I mean, 250 down now from the day's high.
Yeah, I think Prashant, I would say to the extent that the indices for the day it's difficult to comment. But if you look at the last month or so, while the indices are barely 5-7% down, if you look at the BSE 500, more than half the stocks are more than 10-15% down from their highs. So the broader market was already showing some signs of correction. The current ones, as we can see, some of the heavyweight index sector indices are the ones that are correcting, that are laying the whole market down. The broader markets aren't as weak today as well. So we are seeing some of the sector-related moves coming through. We are more on the positive side, although we understand that the valuations aren't exactly cheap. But the kind of growth that is coming to be expected in India in terms of nominal GDP of 11%, even a subdued earnings growth of 12-13% is kind of world-beating kind of growth. So we are on a side that we do expect that the markets are likely to be buoyant, likely to remain good, but we are quite selective in our approach. Just because a sector or a certain market cap hasn't done well, that doesn't invite us to go there and invest there until unless there is growth visibility. That's the kind of debate, that's the kind of dichotomy the market offers as of now. And we are believers where we invest into visibility of growth.
Okay, Alok, we will leave it on that note then for today. Thank you very much for joining in and giving us your perspective on the market as we speak. Thanks for being here. By the way, some announcements coming in from the cabinet meeting today. 17,000 crores for fortified rice. Okay, I was wondering because that seemed a lot of amount of money for this. But this is for the next couple of years, all the way till December 2029. We'll get you more of the key takeaways as we go along. The market, by the way, has taken a turn for the worse, and the bulls will not like this. Just one positive day after 6 days of decline, and then you come in with actually fairly good cues. Nothing to complain, but yet the nerves are very, very visible. And now we're trading below the 25,000 mark. Let's just quickly dial back and see where the bulk of the selling is coming from. Bank Nifty is also negative, about 75 points lower on the Bank Nifty. Weakest links, ITC, Nestle, Britannia, Lever. The slide in FMCG is very pronounced. Not a very usual thing. Total slam dunk on FMCG coming through. And then there are big stocks like Reliance, HDFC Bank, L&T, you name it. Prashant, I don't know. I mean, I don't want to sort of second guess it, but the nature of the selling, again, looks like we'll have to watch out for that FPI number today. There's a large stocks falling big time.
No, absolutely. And, you know, this is, so yeah, I mean, that question, right, which seemed like the question was answered in the affirmative that, you know, is the bottom that we saw yesterday, is it temporary? Is that a major bottom?
Yeah.
And, you know, we had people like Devina saying, well, it's temporary. But with a 200-point surge, I mean, you know, you don't think that, you know...
You want to put it behind you.
But suddenly, with 200 gone and now another 50 gone, we'll let us see. Remember, the other big dynamic which is coming up, just purely from an India-specific point of view, is that there's a very large IPO which is opening, right? Hyundai's IPO opens next week, Monday, right? I think it opens. And
15th of October.
So Tuesday then.
Yeah.
Yeah, Tuesday then. So, I mean, I think that also perhaps is a dynamic which one needs to take it. It's the largest ever. So there will be some amount of, you know, cash creation, etc., which both local investors and foreign investors would need to do as that makes it to the market, I mean, to apply for it, etc. So keep that in mind as well. That's a very India-specific dynamic, apart from, of course, everything else which is happening. So, yeah, I mean, you know, just putting that out there on the table as well. So just under 25,000 for now, 965 or so is where we are at. But let's just stick with autos for a bit. Escorts Kubota is the one that we want to focus on. It was up sharply earlier, and there's some positive commentary from MK, the broker. Vinny is here with details. Vinny.
Yeah, so looking at Escorts Kubota also, a positive note that came in from MK. They've upgraded the stock to a buy from a previous ad rating, increased the target price, new target price of 4,700 rupees per share. What are the key triggers and what is making MK so positive on Escorts Kubota? One is in terms of the monsoon season. That's turned out well, so that works out well for tractor companies, and they expect that tractors will actually start seeing an up move and an up cycle in the second half of FY25. And that was a similar trend that Escorts even sounded in its September auto sales numbers, a commentary that came in. They also expect a positive move coming in. So surely we'll watch out for that. Industry base, that has turned quite favorable. Last year was not that exciting. This time it is expected to do better because of the favorable base. Kubota also is intending to increase its sourcing from India. That is also a mid to long-term driver for the company. And multiple initiatives they are taking to address the export opportunity that is opening up abroad and in the global markets. They're building in a CAGR growth of around 16% in terms of EPS in the next couple of years, what we're watching out for from Escorts, as well as MK is highlighting that the stock is trading currently at 26 times its core September PER versus 30 times which M&M is trading at, so cheaper versus an M&M, keeping an eye on that.
Okay, all right, got it, Vinny. Thank you very much for the details over there. By the way, let's also get you some perspective on global markets. Louis Costa, global head emerging markets at Citi, believes that the next couple of quarters would be a lot more difficult for Europe, whereas timing of the China stimulus will be crucial for markets in terms of a trigger. Let's listen into that conversation.
We do believe that the next couple of quarters will be a lot more difficult for Europe. Very interesting discussions now in China, and I do believe that there are indications that we are dealing with something different this time around. But the problem is the timing. The problem is the magnitude. We are talking about 5 to 10 trillion renminbi fiscal impulse, but what is the timing of that? What is the real number? And markets can run out of patience really fast, right? So we do believe that, generally speaking, if you put this all together with U.S. elections, of course, it's going to be a much more lively a dollar here that eventually, euro downside.
All right, markets trading in the red. The good news, though, is that the breadth of the market is still in favor of the number of stocks advancing. I'll tell you what, we slip into a short break. You come back, we'll focus on all the top buy and sell recommendations from our technical experts. Don't go anywhere. Welcome back. Well, Reliance Industries is the one that's been underperforming. If you pull up a 6-month chart on Reliance Industries with the Nifty, you'll see that's been underperforming in today's trading session as well. Suddenly did a U-turn, which has put pressure on the Nifty. The other problem is ITC, staples, FMCG names. They have seen some selling, and ITC is a large weight, and it's down 3%. So that's the other one that's putting some pressure out there. Mitesh Thakkar is back with us. Mitesh, I want your calls, and also I want you to comment on Reliance Industries. On the charts, where does support come in at?
So Reliance, has been kind of mildly underperforming the market for the last few days. And it's also, trading right at the support pivot of 2740. I mean, 2744 is the level, so we can just round it off. And the structure slightly turned negative. I expect a bounce back and then a sell-off again. And I think eventually it could decline to possibly 2600 odd levels, where I think long-term supports will kick in. So I hope 2740 does hold on nicely and we get a proper bounce back from here. That apart, the stock calls that I have right now, I have STBT on SRF with a stop at about 23.45 and look for a target of around 2300 for tomorrow. And a Sun Pharma is a STBT again with a stop at about 1937 and a target of 1910.
Okay. All right, Mitesh, thank you for that. And you have a restful rest of the day. And we'll catch you with the markets again tomorrow morning. Let's welcome in our next guest. Mayuresh Joshi of William O'Neill is with us in the studios today. Mayuresh, good to see you here in person. Always nice. So we want to start with the big question that Prashant just raised a while back, with the way the market's reacting today. Yeah. And obviously, we're dealing with a very large supply of paper, the biggest ever IPO hitting us come 15th of October. What do you think of that trend and how it's linked to the price action now, just flows? And then more importantly, on the IPO itself, I think people are saying that the valuations are not too bad. They have left a fair bit on the table compared to, let's say, Maruti, M&M. Yeah. Your thoughts?
Afternoon, Subi. Afternoon, Prashant. Lovely to be here with you guys. So in the first place, I think the supply is going to suck liquidity out of the markets. No two ways about it, because it's a large IPO. And it's going to get followed with the Swiggy IPO as well. So it's almost 32,000 crores that you're probably looking at. However, I think in terms of the valuation for Hyundai itself, very, very attractive. So the parent is going to make a killing in terms of raising tons of money out of India. But the basics of the auto industry itself is after sales, distribution, service. I think those become equally critical components. So Hyundai might get a good response, but Maruti with its entrenched network as an example, or even M&M or Tata Motors to a certain extent. The first point of sales is largely done by all these companies in a very uniform manner. But after sales, service is
with
something...
Hyundai, really, Hyundai is no stranger to the Indian market, right? I mean,
absolutely.
How they've revolutionized the entry-level segment with the Santro many, many years ago. So,
absolutely.
I mean, I can take that argument, say, for an Ola, and we've all seen what's happened over there. But, I mean, is it more a function of market sentiment and the fact that passenger vehicle sales overall have not been firing up? They've not been lighting up the charts. I mean, basically, do you see this as a subscribe right now, or will you avoid for other reasons?
No, I think it's a subscribe. Okay. But I think Maruti is also a good bet to have. So I think the point that I'm raising is there is a sufficient amount of headroom for these players to probably grow. And you're absolutely right. I think in terms of valuations, in terms of the products that they've probably got, in terms of pricing, it's very, very attractive. The base effect is very high for auto companies. So I think you will probably see it normalize this year with new launches catch up in the next year.
One of the things I heard from an analyst I was talking to who visited the plant when the management was taking analysts for plant visits, they said, well, he wanted to see a little more aggression. If I can paraphrase, that they said, well, we'll grow with the market. The market grows at what we'll grow at the. So maybe that was. But I think maybe there's also a cultural thing, right?
Yeah,
because
exactly.
It's Japanese, Korean.
Koreans,
I mean, that we don't know. But yeah, it's as Surabhi said, sort of newbies as far as the market in India is concerned. Just Mayuresh, your thoughts on what's happening in the market per se and the road ahead, near term, very near term.
So there will be some element of pressure because we've seen the election results, which was a surprise, and the markets reacted yesterday. You really don't know what is going to happen in the Middle East. So if this escalates to a large extent, which the market is not expecting, you are going to see a knee-jerk reaction in the market. The second aspect, we are speaking to our US teams and the Chinese teams as well. The US team is not of the belief that earnings, even in the US context, is going to grow at a good pace. So earnings are going to be soft in Q3. Our earnings are going to be soft for most sectors. And therefore, I think liquidity with the IPOs coming in as well will also create some element of upheaval as far markets are concerned. So I think expecting a soft earnings season, not too much of fireworks in the market, maybe consolidation that the markets will go through.
Okay. All right. Well, you want to listen to the next conversation as well, Mayuresh. This is unlisted, but wish it was listed. I think it's one of those. I'm talking about Zerodha. Speaking with CNBC-TV18's Shireen Bhan, Zerodha's Nikhil and Nitin Kamal talked about their view on the Indian market and the consumption boom and how it kind of relates with the growth story overall. Listen to some of the sound bites.
You've been a little bit more circumspect on the kind of consumption boom that everybody associates with the India growth story. I mean, at 17 crore demat accounts today, what do you believe that number is likely to be 5 or 10 years on? I also know that you've very boastfully said that you've never gotten a prediction right in the last 14 years. But with that disclaimer out there, what is the best case that we're looking at, assuming this per capita doubling happens?
I mean, when it doubles, we'll see then. But as of now, the 17 crores, I mean, 10, 11 crore unique is a stretch. I mean, I would say 5 crore Indians can potentially invest in the markets. And if you see the number of accounts which has got anything sizable in terms of investment, about 25,000 or something, that's a subset of 5 crores. All these new accounts that are coming, they will just go away very easily. As in one bear market and they will go away.
You think so?
Yeah.
So you think the recent correction that we've seen has scared people a little bit, no?
Recent correction is a blip, So it's not that. I mean, to say like a 20-30% drop in the indices, whenever that happens, I think a lot of this 20 to 25-year-old crowd, a lot of people who come into the market will not invest anymore. So.
Are you as circumspect as he is about
how many people in India will invest?
Yeah,
I'm optimistic on that.
I thought so. I could sense a little bit of divergence there. So what's your bull case?
I wouldn't be surprised if 10% of India had direct or indirect access to stock markets in 10 years from now. I don't see why it's not possible.
10 years from now is a long time. I mean, you're saying as of now, in the next 2-3 years, as in...
Yeah, I mean, 5 years, 10 years,
yeah,
up to
10 years,
the forecast?
10 years from now, I mean, we are optimistic. We are forced to be optimistic. That's why.
That's why you're in this business, and that's why you're entrepreneurs. Yeah.
Yeah. So, but right now it feels like a stretch. The whole boom from 2020 onwards, it seems like a big stretch. So.
Imagine that, and of course there have been participants in that huge boom. The equity cult that swept across the country, and you can catch that entire conversation. It's coming soon on Young Turks Reloaded.
Welcome back. Well, IDFC First Bank as well as IDFC, both of them have moved to the low point of the day. Remember, the record date is scheduled for October 10th. So, there will be some necessary adjustments that probably could have taken place in the last 30 minutes. So, both these two stocks, are currently at the low point of the day. Keep an eye out on that. Mayuresh, any view on IDFC?
So remain positive, Nigel. I think the entire story surrounding the group and the expectations in terms of earnings recovery should start flowing through in the next few quarters as well. Maybe it's shown signs of underperformance, but I think for a genuine long-term investor, I think it's a good bet at the current juncture.
By the way, look at this. Remember which top nifty gaining stock we were discussing yesterday? It was Trent. And even today, it's going to be Trent. Though the markets cooled off, this stock has taken pole position, 2.5% up on Trent. That makes the tally so far in the last two sessions itself, about 3 sessions actually, this week, 13% or so. Mayuresh, really quickly, I mean, this company knows how to rewrite the disruption playbook itself, right?
Absolutely.
And the latest conversation has been on lab-grown diamonds, and we were having that discussion this morning itself. I don't know if it's that, or if that's a new trigger the market is latching on to, or if it is just general buying frenzy. What's your view at about 8,200?
Very expensive. So no two ways about it. So anybody
don't know about the clothes of the diamonds, but the stock is very expensive.
Yes. So Zudio's done very, very well for them. They are reinventing every few years, and obviously I think this new story about diamonds is going to create some element of buzz. Apparently, if you look at Goldium, which is a peer group, the margins for these lab-grown diamonds is around 25-26% compared to normal diamonds at 15%. So it is a margin accretive business, but no, very, very expensive at this juncture.
By the way, Goldium is up 10% today. It's
these lab-grown diamonds, they're definitely glittering in the stock market. Whether people are buying or not buying, or the real deal or the lab-grown deal, but I think the market's really latching onto it.
Absolutely. It's a limit up. So, yeah, it's 2 minutes to go, by the way, for market closing. 1 minute 57 counting down in terms of today's session. Lots of names really moved around. And, I just put up Honasa, if we can. There is Mama Earth. Stocks come off very sharply from early September to where it is now. Honasa is down from about 550 to about 430 now. I don't know if you have a coverage, if you liked it or tracked it at any point, Mayuresh?
No, we do. But again, I think the consistency in earnings growth, Prashant, is something which clearly lacks out here. So new products coming in, new launches, all in good spirit. But unless it reflects on numbers and consistency in that, very difficult to re-rate the counter.
Also more physical stores going forward, as they've said. So we'll see. And that they've said, well, that's margin accretive, going more physical in terms of actual stores, etc. But I think we're going to wrap up things here with just a minute and a half to go, less than that for market closing. It's a absolutely flat close for all that happened today. It's going to be 2.3 point change. Of course, the adjusted may be a little different, but we're tracking about half a point, 2 point change on the Nifty. Let's just look at the Nifty Bank as well, and that is up about 0.15. That's about 70 point gain. Again, from the day's high of about 51,700, it's a far cry for the Nifty Bank as well. Broader markets headed a little better, although here also the gap between advances, what was up and what was down, narrowed. 1,900 up and about 850 stocks, which finally end lower. Surabhi.
I'm just looking at a press release from Infosys. It hit the screens just as we were closing. Infosys and Microsoft have decided to expand their collaboration with respect to generative AI and Microsoft's cloud services. I'm trying to scan and see if there's any sort of monetary value that's been attached to it. But anyway, I think the market will dissect this tomorrow as you go forward, whether there's any clear materiality associated with this announcement. Just to quickly talk about individual moves and shakers, FMCG was really slammed hard today. HUL, Britannia, these are names on the way down. Throw in some auto names as well if you're talking consumer. Bajaj Auto, M&M, these are stocks that have ended lower. IndusInd Bank is on the lower side as well. But to offset this, some smart gains on some of the other names we discussed, of course, Trent. The other one is Cipla, Tata Motors, SBI, and Tech Mahindra. These were some of the gainers on the upside. Just some stocks to highlight even beyond the Nifty. Divi's, because of the Citi note, which is sounding very optimistic with respect to their opportunity of supplying APIs for the GLP-1 series of drugs. That stock was up about 8%, so something to take note of. And CDSL had a good day, 8-9% up there as well. Axo Nobel, lot of volatility on the stock, but the end result is still about 9% on the higher side. And look at IIFL Securities, 11%. Rights up 7-8% because of their expansion in markets in the UAE. So plenty of movers and shakers, but yes, otherwise at a headline level, a slightly disappointing day for the bulls. Well, with that, we take your leave on this edition of Closing Bell. Thank you very much for watching, but don't go anywhere because all the action continues up.